Howdy, Jacob here. Today we're looking at CSW Industrials in the building products industry, 4.8 billion market cap, a little bit higher enterprise value. Very good growth. Revenue 262 million in 2015, 793 million in the most recent year. They have started to pay a dividend, but it's pretty inconsequential in relation to their earnings per share recently. Operating margins 20% most recent year, high teens usually. Gross margin down a little bit from 10 years ago. So it looks like their earnings haven't been growing as fast as their revenue, so I don't like that. But still, return on invested capital in the double digits, very positive sign. Balance sheet shows 22 million cash on hand, no short-term debt, 166 million long-term debt, but down good amount from the year before. Cash flow statement shows recently 160 million cash flow production. So we're really not concerned about that long-term debt figure. Their use of cash is mostly acquisitions. And then you have almost pretty evenly spread between debt reduction, share repurchases, and a dividend payout that's a 0.2% yield. So that 0.2% yield is less than 10% of the most recent 2 years. Heavy amount of debt reduction, and then 20 so to share repurchases, 30 plus to acquisitions. So I think that's enough to get me going to write some assumptions. On the revenue side, they have been making a lot of acquisitions, but for me, I don't like companies going into debt to do so. So I will be allocating roughly 40% a year. So again, that could be nothing for 3 years and then 120 plus percent 1 year at one time. So for me, given that, I think they still have pretty good growth here for business their size, maybe 7%. And then for margins, earnings are pretty consistent. Free cash flow is a little higher. Let's do 12 and 14. Share change. They do buy back some shares. Stock-based compensation is a little bit less, but 1% for them would be about 48 million. I don't see them buying back that much. So I'll just say it's nothing, no share change. With the PE, pretty consistent with market, I think. And then for dividend, it's pretty inconsequential. It's kind of new, so maybe I just increase it with a little bit more than the revenue. 79% drop, what I'm looking for to get to the price we want. I mean, everything outside of price looks pretty solid, but like I said on the last video, I think price is extraordinarily important and the most important thing for me. I mean, I think if I were to give you, $1 of cash every day or $1 a year every year forever, I'd rather pay way cheaper of a multiple than if I were to give you $10 a day for 10. Yeah. So I mean, to me, I'm just going to be waiting on this company to get to a more attractive price, and if it doesn't, that's fine too. There's so many companies out there, I don't have to push myself into a business that I don't understand, whether from the business perspective or the price perspective. For me right now, I think I could understand the business if I were to do some research, but I couldn't understand the price at this price. It's not so obviously cheap that I'd be even willing to waste my time here. But hope you enjoy the video and have a great rest of your day. Thanks.